Welcome to Pro News Weekly. Let's dive into the latest updates from the financial markets. The US dollar is advancing with caution. Stock indices are shrugging off negative news. Gold is consolidating amid uncertainty. And Bitcoin is struggling with regulatory constraints. The US dollar took 2 steps forward and 1 back following another batch of hawkish macroeconomic data and new record highs for US indices. NVIDIA's market capitalization rising to $5.5 trillion triggered an S&P 500 rally, boosted global risk appetite, and reduced demand for the greenback as a safe haven asset. Bears on Euro USD were unable to fully capitalize on the sharpest PPI acceleration since 2022, up to 6% in April. The Fed prefers to gauge inflation using the Personal Consumption Expenditures, or PCE, price index. Based on CPI and PPI data, core PCE could accelerate to 3.3% in April. Coupled with the stabilization of the labor market, this gives CME derivatives a probability of over 30% of a rate hike in 2026, rising to 50% by March 2027. Meanwhile, the ECB has signaled that it may not share the view of Bloomberg experts and the futures market that there will be 2 to 3 rate hikes of 0.25 percentage points this year. ECB's Olli Rehn stated that the Eurozone is on the brink of a stagflationary shock, while the bank's chief economist Philip Lane believes that a contraction in domestic demand will make it difficult to adjust monetary policy. The S&P 500 recorded its 17th record close since the start of the year, lifted by impressive corporate earnings in the first quarter. Companies that have already reported saw profit rise by 27%. This significantly exceeds the 12% forecast by Wall Street at the start of the earnings season. The gap between actual and expected figures is the widest since 2004, excluding recovery periods following the 2008 global crisis and the 2020 pandemic-related recession. The bulls are betting the rally will continue. If the S&P 500 has managed to turn a blind eye to both the conflict in the Middle East and the growing risks of the Fed tightening monetary policy due to accelerating inflation, the stock market has room to grow. Morgan Stanley sees the broad stock index at 8,000 by the end of 2026 and 8,300 in 12 months. This is a substantial upward revision from the bank. The bears are finding similarities with a bubble from half a century ago. In the late 1970s, the Nifty 50, including Polaroid, Kodak, and Xerox, accounted for 45% of the S&P 500's market cap. Today, the concentration is even higher, as the top 10 companies' market value is close to 40% of the index. Uncertainty about the outcome of the conflict in the Middle East, the Fed's monetary policy, and the unclear impact of India's decision to raise import duties on precious metals are forcing gold into a consolidation phase. Investors are looking forward to the meeting between Donald Trump and Xi Jinping. China may put pressure on Iran and push it towards peace. This would weaken the US dollar and contribute to a rally in gold. India has raised import duties on gold from 6% to 15% to reduce its trade deficit. The country is the world's second largest consumer of the precious metal, purchasing between 600 and 800 tons annually. In theory, the tariff hike should reduce demand. However, in reality, the rupees fall to a record low, the Prime Minister's appeals not to buy gold, and the subsequent tariff increase point to economic problems. As a result, the risks of increased smuggling are rising. The gold rally is being held back by the higher chances of a Fed rate hike in 2026, which has risen from 16% a week ago to over 30%. This is leading to a rise in Treasury yields and a strengthening of the US dollar, an unfavorable backdrop for gold. Bitcoin has failed to hold above 82,000 and has been falling for several days in a row due to disappointment with crypto exchanges and companies' ability to pay rewards to investors holding stablecoins in their accounts. The long-running standoff between members of Congress, lobbying on behalf of banks and the digital industry, is ending. The compromise is a provision that rewards only active users of crypto systems. This limits the industry's ability to attract additional funds and is putting pressure on Bitcoin. The bad news has led to a negative correlation between Bitcoin and US stock indices. The link with gold has also been broken. Investors can only speculate which asset-type cryptocurrency belongs to, a risky one or a safe haven. Following a lull caused by the meeting between Donald Trump and Xi Jinping in Beijing, investors' attention will return to the Middle East. Will China assist the US in a peaceful resolution of the conflict? It may put pressure on Iran, but the final decision will rest with Tehran. Markets are hoping for de-escalation, but disappointment could lead to a stronger US dollar. On the economic calendar, attention should be paid to the minutes of the April FOMC meeting, as well as data releases on European business activity, the UK labor market, inflation, and retail sales. Australia will release employment statistics, while consumer price data will come from Japan and Canada. Markets will look to these reports for clues about the future trajectory of central bank interest rates. Investors will be interested in Keir Starmer's ability to retain the leadership of the Labour Party and the seat of British Prime Minister, hints from the Japanese government regarding currency interventions, and Kevin Warsh's first steps as chair of the Fed. Any comments from the new central bank chief will affect dollar pairs in the Forex market. Keep up to date with global market developments in Pro News Weekly. Like, share, and subscribe.